Is it just me, or does it seem to you also that everywhere you turn you will see these predictions of doom and gloom and headlines like the upcoming crash, the crash of all crashes, the biggest crash of our lifetime? Judging from all that, I think the saying in journalism, if it bleeds, it leads, has hit the nail on the head in this case. This is because of human psychology. We are all wired to react more to negative things than we are wired to react to positive things. This is why I have researched the last 100 years of stock market data, and I will be sharing my findings with you in this video. As usual, at the end of the video, I will share with you my thoughts if there will be a market crash in 2022 and what is my strategy for it. So, if this is something that sounds interesting to you, stick around to find out. What's up, strangers? My name is Veda, and I'm here to help you better understand the wealth game and become part of the wealth game nation. As the name itself says, it's just a game that the wealthy play, and the sooner you realize it's just a game, the sooner you can learn the rules of the game and take part in the game. On this channel, I cover everything related to personal finance, investing in the stock market, cryptocurrencies, real estate, and everything related to the game. So let the games begin. Let us first establish a common understanding of a couple of investing terms that will help us better understand the stock market crash data that follows. I said common understanding as sadly there is no universal metric nor definition used to identify these investing terms. Luckily, however, there is some common understandings when it comes to those terms. In case you know this already, indulge me, sit back, relax, and let me refresh your memory. There still might be something new for you here also. First, something positive. What is a bull market? A bull market is an extended period of time in which a large portion of security prices such as stocks, commodities, and cryptocurrencies are rising. Typically, this is a period between two bear markets where the security prices rise more than 20%. So happy times when everybody looks like a genius. What's bad here? When people who are making profits start believing they are geniuses since their investments are rising. That's a big mistake. Pro tip: do not ever take rising nor falling prices as confirmation that you were right nor wrong about a certain stock. Second, what is a bear market? As you can already guess, a bear market is the opposite of a bull market. Common understanding of a bull market is an extended period of time in which large portions of security prices decline 20% or more. Third, what is a correction? As my favorite comedian / investor Peter Lynch famously said, a correction is a fancy way of saying we just lost a lot of money. This is when the overall market drops more than 10%. Fourth, what is a stock market crash? Again, there is no universal definition nor metric, but a common understanding of a stock market crash is that it represents a sudden drop in security prices, sometimes even in a single day or over a period of a few days. Crashes are driven by panic and the fear of the unknown, sometimes fueled by the media or by the underlying macroeconomic factors. Last but not least, what is a recession? Even though recession is a macroeconomic term and not an investing term, there is still some correlation to the stock market, and I will get to that in a moment. For now, let it suffice to say that the recession is when the national economic growth, the GDP, which stands for the gross domestic product, is negative for 2 or more quarters in a row. Now that we have established a common understanding of these few investing terms, let us look at the history. According to a report by CNBC, link in the description below, there have been 26 market corrections of S&P 500 between World War II and COVID-19 market crash, with an average decline of 13.7% over a period of 4 months. Recoveries from those market corrections have also taken 4 months on average. Looking back at the history, this means that on average there is a correction every 2 years. It is stated in the same report that there have been 12 bear markets of the S&P 500 in the same time period with an average decline of 30% over a period of 14 months. Recoveries from those bear markets have taken 24 months on average. Again, if we look back at the history, this means that on average there is a bear market every 6 years. Even though the report on the mentioned corrections and bear markets were looking only at the S&P 500 index, according to my research, the Nasdaq, the Dow Jones Industrial Average, and the Russell 2000 also have had very similar fate in the past. Now, let us look at the 5 biggest stock market crashes in the history. Based on a report from Motley Fool, link in the description below, those crashes are: Number 1. Wall Street crash of 1929, also known as Black Thursday. This was the worst market crash in the modern history. The Dow Jones has dropped almost 90% from its all-time highs. This stock market crash marked the start of the Great Depression, and it lasted until 1932. The Dow Jones did not make a full recovery for 26 years, all the way until 1954. The primary cause of the 1929 stock market crash was excessive leverage. Many investors have been buying stocks on margin. For those who are not familiar with buying on margin, this is when you pay a percentage of a value of a stock, usually 10%, under the terms of a margin loan. This resulted in a high debt, and when the debt bubble burst, it resulted in the worst stock market crash we have ever seen. Number 2. Black Friday crash of 1987. This was the biggest single-day decline in the stock market history, where the Dow Jones Industrial Average dropped by 22%. This stock market crash was primarily caused by the rise in program trading. Computers were creating automated buy orders when the prices were rising and sell orders when the prices were falling, which then, in the falling prices case, caused other investors to sell in panic. As this crash was primarily caused by program trading and not an economic situation, the recovery of the market crash was relatively fast. Less than 2 years later, the Dow Jones has recovered all its losses. Fun fact: as a result of the Black Friday crash of 1987, today there are circuit breakers in place that prevent a repeat of Black Friday. Namely, if there was a 7% drop during one trading day, trading would be suspended for 15 minutes. If after that the stock market would fall 13% on the same day, the same 15-minute suspensions would kick in. Lastly, in the event of a 20% drop in a single trading day, trading would be shut down for the remainder of the day. How about that? Number 3. Dot-com bubble of 1999-2000. In the 1990s, the internet was booming, and with that also internet-based companies. The Nasdaq Composite has 5x from 1995 to 2000. This was an unsustainable increase. The main cause of this stock market crash was high valuation of internet-based companies. Even the companies without revenue were highly speculated that they will all become extremely profitable in the future. As the result of the crash, the Nasdaq Composite has lost almost 77% of its value and did not make a full recovery for almost 15 years. Number 4. Financial crisis of 2008. This stock market crash was tied into the housing market. The Federal National Mortgage Association, or FNMA, wanted to make home loans accessible to people with low credit scores and who had less money for down payments. In return, they got high interest rates. So far, this story sounds like nothing could go wrong here, right? With this increased availability of mortgage debt, everybody started taking out mortgage debt. Investors, new homeowners, old homeowners, companies, everybody wanted to boost their profits. Pretty soon, the banks were not able to cover their losses, and it was the start of the stock market crash. The Dow Jones dropped 54% by March 2009 and 4 years later managed to fully recover. Number 5. Coronavirus crash of 2020, also known as the flash crash. We all know this one, our latest crash caused by the coronavirus. This crash happened in March 2020, where the S&P 500 lost 30% of its value. However, the S&P 500 recovered to its previous all-time highs by August 2020, just 5 months later. This recovery was fueled by huge stimulus money from the Federal Reserve and aid package by the Congress. The effects of that new money printing has resulted in high inflation, which we are all feeling at the moment also. Lastly, quick word on recessions. Based on a report from Hartford Fund, link in the description below, out of 26 bear markets since 1929, there have been 15 recessions. If my math is correct on this one, this is a 58% chance that there is a recession during a bear market. So, slightly better chance than a coin flip. If you find value in this video, please support the channel by liking this video, subscribing to the channel, and sharing with your friends. This helps me a lot when you guys do it, and it does not cost you anything. In return, I will do my best to help you become more financially literate much faster than I did. By sharing my insights, my journey, and teaching you rules of the game that the wealthy play, you will be able to take part in the game in no time. So, will there be a stock market crash in 2022? Nobody knows, as this has pretty much the same odds as a coin flip. So, Minecoin says no stock market crash in 2022. There you have it. In case I'm right, thank me later. In case I'm wrong, just add me to the list of other YouTube gurus doing a majestic job of not giving financial advice. But in all seriousness, I don't think there will be a stock market crash in 2022. 2 reasons why I don't think there will be a stock market crash in 2022. Reason number 1. In case you didn't notice, we have had a tough go of it lately. From COVID, which hopefully the worst is behind us, over supply chain issues caused by the shutdowns, money printing, 40-year high inflation, interest rates being raised, all the way to Russia invading Ukraine. A couple of those things I just listed happened in the last 6 months. Still, no market crash so far. Reason number 2, as we just saw, there was a market crash in 2020 due to the coronavirus, and since market crashes happen on average every 6 years or so, I don't think there will be one in 2022. Now, does it really matter if there is a stock market crash in 2022? Looking at the big picture, no, not really. As we have established earlier, market crashes are part of the stock market and they are very common. There is a great 28-year-old video out there by Peter Lynch on stock market crashes that has aged beautifully. Everything said in that video still holds true today. If you don't know it, I suggest checking it out sometimes. The other question is, will we have a rough 2022? Compared to 2021, where the S&P 500 had a return of 27%? Yeah, I think so. It certainly has been a rough start to 2022. We have been in a correction already for some time, at least those of us who are investing in the Nasdaq. Even the S&P 500 has, for a brief moment, entered the correction. What I will be doing during 2022, crash or no crash, I will stay invested in the stock market as I'm in it for the long run. As the cheesy saying goes, time in the market beats timing the market. Eventually, over time, sound businesses prevail and the stock prices of those businesses usually go up over time. Not only will I stay invested in the stock market, I will keep investing in the stock market. I am going to look for great opportunities, for sound businesses who are due to whatever reason on sale at the moment, and deploy my excess cash into the market. This is tied in to another cheesy quote, this time by the granddaddy of investing, Warren Buffett, which is also very true, and this is, be fearful when others are greedy, and greedy when others are fearful. On my already existing positions in my portfolio, I will dollar cost average. For all of us, it is important to remember that the prices will go up and the prices will go down. There will be corrections, there will be crashes, there will be bear markets and bull markets. The most important thing to know is there are more prosperous times than there are bad times. So that wraps up the talk on the stock market crash for today. Now, you tell me, do you think there will be a stock market crash in 2022? Does it matter to you at all? What are you doing differently in 2022? Don't be a stranger and leave me a comment below, as I'm really curious to read about it. If you haven't seen my video on what asset classes to invest and what asset classes I invest in, I suggest you check that one out next. The link is in the description below. That's it for now. Thank you so much for watching. I hope you enjoyed it and I will see you in the next game. What's up, you guys?